Hey everyone, welcome back to another dividend investing video. On November 30th, 2023, the Walt Disney Company, ticker DIS, announced a cash dividend of 30 cents per share for all shareholders of record at the close of business on December 11th, 2023. The dividend will be paid out to shareholders on January 10th, 2024. This is the first time Disney has made a dividend payment in over 3 years. The company previously cut its dividend during the COVID crisis in 2020 and due to an activist investor. So with the dividend coming back, is Disney a buy? In this short video, I want to take a look at the company and see how things look going into the new year with a reinstated dividend. So let's get into it. I'm Nick, and this is the Dividend Growth Income Channel. Thank you for joining me today. I'm not a financial advisor or guru. I'm just a regular guy who wants to share my love of dividend growth investing and building financial independence with passive income. If you could, please do me a favor, smash the like button and subscribe to keep up with future videos. This helps us out more than you can imagine with the algorithm, so we can bring you more quality dividend investing content. So because this dividend is for the second half of fiscal 2023, I think it's reasonable to assume that Disney will return to its former twice-a-year payment schedule, the upcoming payment in January, and then we'll have a second in July. Although I haven't been able to find anything definite confirming a payment in July, I just think it's a reasonable assumption that the intention is to go back to that schedule. No guarantees. Here's a statement from Disney chairman Mark Parker. This has been a year of important progress for the Walt Disney Company, defined by strategic restructuring and renewed focus on long-term growth. As Disney moves forward with its key strategic objectives, we are pleased to declare a dividend for our shareholders while we continue to invest in the company's future and prioritize meaningful value creation. Okay, so that 30-cent dividend payment, that's about 65% lower than its pre-pandemic payout. This is a low dividend payment, and assuming it's also paid at this level in July, we'd be looking at a forward yield of 0.64%. Not very much, right? You have to remember that Disney was especially affected in 2020 with the forced closure of their theme parks. It was also a time they were investing heavily in Disney Plus. And there was an activist investor who lobbied the company to cut the dividend so they could double the Disney Plus content budget. So I checked SimpliSafe Dividends. They've not yet given Disney a dividend safety score. They do point out there's some challenges that remain, but the Disney's enduring brand equity and improving outlook should support a sustainable dividend. We don't yet know how fast they intend to grow this dividend payment, but for a good 10-year stretch, this was a strong dividend growth stock, so it's not hard to imagine they will work to bring this back to its former glory, especially with this low starting yield, very typical of a lower yield, high dividend growth. Now, with earnings per share of $4.48 and forward free cash flow per share of $4.44, I don't see any issue of them paying this projected annual dividend of 60 cents. So as far as the dividend goes, I'm not sure I'm sold on buying Disney just for this dividend being reinstated. That's not to say there isn't opportunity here. Now, year to date, shares are up just over 4%. At the time of publishing, shares are trading at $92.58 per share. Now, like many stocks, it had a good run in the month of November, up about 14%. So you were buying a month ago, you're probably quite pleased with yourself. And Disney stock in recent years, though, has been a massive disappointment for investors. Shares are down 20% from 5 years ago. Let's zoom out 10 years. Then we see shares are only up 30% from a decade ago. This is not what you're looking for in a 10-year investment. Let's be fair and look at the total return over the last 10 years. Then we would be up 42.68%. And remember, so 7 out of those 10 years, Disney was paying this dividend, right? But still, this is quite pathetic compared to the S&P 500's 206% total return over the last 10 years. So if you've been holding Disney shares over the last decade, you're probably less than enthused with them right now. But of course, this could mean that Disney shares are now ripe for that turnaround given this lackluster decade, could it, right? I mean, this is an iconic brand. House of Mouse, Star Wars, Marvel, Pixar Animation, ESPN, the theme parks. No doubt a ton of intrinsic value in such brands. Some of the top names in entertainment, really. The Wall Street analysts appear to be generally bullish on Disney, giving it a buy rating of 4.21 out of 5. Out of the 32 analysts, 19 rated a strong buy, 5 a buy, 6 a hold, and 2 a strong sell. Whatever you think that's worth. And the average analyst price target is $103.71, and this represents 12% upside from where shares are today. And the forward PE is at 20.92. This is 35% higher than the communications sector median of 15.41. but it's also about 50% lower than its own 5-year average of 42.21. I would not call Disney a cheap stock, and Seeking Alpha gives it an overall valuation rating of a D for its valuation. By the way, if you want to get access to all the features in Seeking Alpha right now, their Black Friday sale is extended through Friday, December 5th, where you get a 30% discount on the Seeking Alpha Premium membership. This is the best deal they've given our subscribers in about the last 9 months, so that's something you could take advantage of if you like. And Disney certainly is a company that is on the rebound, and they aren't totally on the right track yet. They report that they've been working on cutting their costs and restructuring for better stability and profitability. And I think reinstating the dividend is one sign that things are at least heading in the right direction. But one thing I'm not a fan of investments is drama. And for whatever reason, there always seems to be just a ton of drama surrounding this company, and I'm sure there will be comments to reflect the polarization of Disney. I think people in general would rather see companies stay out of the various political debates. There is no reason to alienate large swaths of your customers or shareholders. Everyone has entitled to their own beliefs, their own opinions. And no denying that Disney's place as an entertainment giant is pretty solid, right? I'm personally going to remain on the sidelines, but I know a lot of you are either shareholders yourselves, or maybe you're a fan of the company, or maybe you're hate watching, but we'll continue to monitor things either way. So what about you? Are you a shareholder? Does the dividend reinstatement change anything from your perspective looking at Disney? Please let me know down in the comments, and go ahead and click into this next video where I show the stocks I'm holding in my public portfolio here, the dividend growth income portfolio, I call it, where I'm going over the purchases I made and the dividends we received for the month of November. So cheers, everyone. Thanks for watching, and until next time, keep investing.